Well, hello everyone, this is Rob, and I'm here to discuss a possible bear market this year. Now, I wrote a blog post recently, just before the new year, discussing the possibility of a bear market in the new year. And if I look at this situation, I can see on the DAX is down, the FTSE's down, the S&P's down, and even the South African Aussie is pointing down at the moment. Now, this could all be turned around, and it's been a very volatile start to the year. As you can see, the Brent crude is quite far down as well. So while being on holiday, I still decided that I really need to write a post with the thought of a bear market striking this year. And while I was sitting there watching the market turn bullish as the fund managers had gone on leave, it led me to wonder who was actually buying the stock during the Christmas period. Well, as per usual over the Christmas period, we did have a kind of Santa Claus rally after the beating of the last few months before then, because it's been really volatile. Now, the question is, was it just a relief rally in the bear market? So, if this was just a small relief rally, in a coming bear market as we move into 2016, then it just depends where it starts and why. Most traders took their holiday a little later for a change, so be careful as they return from the holiday, as I doubt anyone's going to see a positive trading year ahead. When looking back on 2015, one can only wonder where 2016 will find bulls in the market. The world appears to be in a financial shambles, particularly in the emerging markets, with only the USA markets appearing to show signs of recovery. This said, if you look at the S&P, it's actually looking at a little bit bearish at the moment. While that all could change, we don't know. The USA lifted rates. They did it under pressure with economic conditions almost meeting requirements, but still not perfect. It's doubtful that they will raise rates 4 times as suggested, and if they do raise again, I suspect it'll be lifted twice through the year at a maximum. As you could see, most of the economic data that's come out in the recent couple of weeks has been rather poor, and I don't see much going on there. The possibility of the world moving into a bear market is extremely high when looking over all the signs. We've just run a 7-year bull market, and this is a really long time in the markets, even though it's been done under special conditions. You may remember everyone talking about kicking the can down the road back in 2008, or you may have forgotten, as it was such a long time ago. But you have to ask yourself where that can is now, and are we about to catch up to it? While markets tend to inherently go up, they also tend to correct every so often. Commodities have been hurt really bad worldwide, thanks to a lot of China, but you can't just blame China for everything. And it's making resource companies a really poor trade. Although they are cheap at the moment, they can still get a lot cheaper. And it also makes European stocks the most attractive for bulls, as they kind of still got quantitative easing and are about the cheapest at the moment. The recovery of Europe is expected, and commodities tend to be a very low percentage of the European stocks. One could buy euro equity and expect a pretty good dividend return if you're an investor. Keep in mind that the world markets do turn bearish. Europe won't be excluded, but perhaps won't be hit as hard as the others. At the moment, rather than investing, I'd rather be a trader, because you can get in and out and move with the volatility. One cannot see the route to recovery for emerging markets with commodities in a bear market as we stand, unless we have a catalyst for a resource recovery during 2016 somehow. While this could happen, there are no obvious signs that lead to a possible recovery at this time, and it looks set to get worse. I would say just because resource stocks are cheap does not imply they cannot get cheaper. The days of buying a stock and leaving it when it goes up over the years are probably gone, and you're going to have to start trading. To make a decent profit on the market, you're going to have to start trading. Equities have consolidated here and seem to be waiting for valuations to catch up. And if they don't catch up soon, a correction is due. Far too many stocks are sitting on extremely high price to earnings ratios. And while this is not the only way to value stock, it is a good warning to valuation of any company. Valuation is important, and if valuation is high, one mistake will cause an extremely bearish move. Valuations become high because traders are sheep. They tend to follow what's popular, go with the momentum at the time, so make sure you're not the last one to get in. Just when you get into something, because everybody has told you it will work, it does the opposite and turns out not to be a sure thing. Always do your own research and stick to your own plan. Look, oil has continued its bear trend, as you can see here with Brent crude. Look at this long, nice downtrend. Perfect, isn't it? But it's doubtful it'll get much worse next year. Some are saying it'll drop to $30, and yeah, I don't know. It may even start showing some signs of recovery during the year. If oil and metal stop their fall, the resource stocks may start to consolidate, with a few starting to even recover. But as I've said before, don't count on this. This is a strong bear market in the resource sector, and it can pull the general market with it. Technical trading can help you a lot with decision making and knowing where to buy stocks or forex. And if you don't have a good system, you can download my system available on my blog. Simply download the forex system and get the full trading system with it. So I've got a forex system there for you. I've also got an equity trading system there for you. I personally prefer trading equities. I'm not a big forex guy, but the system works very similar, very much the same thing, and it helps you a lot with technical trading. It also teaches you a lot about fundamental trading, but I find using the technicals does kind of help your fundamental trading as well. Particularly when you're deciding whether to go long or short on a product, one can tell from your fundamentals whether you're going the wrong way. Yeah, I'm not going to stay on this for much longer. This is it. I'm expecting a bearish kind of year. If you're wondering how to make money in a bearish market, then go to my blog and read the post on making money in a bearish market. There's some interesting information on trading a bear market. Thanks for reading the blog, or thanks for listening to the video. And I'm sure you're going to go and read the blog and go and subscribe and get all the information you need on a regular basis. Till next time, this is Rob signing off. All the best.